See things headed when it comes to the debt-based fiat system that we're living under? I feel like we're starting to see some cracks. I mean, we have been for several years or decades, some would say, but we're starting to see crises on multiple fronts be exposed in private credit, government debt, real estate, and more. How do you see this all unfolding? And when it really does hit the fan, will gold and perhaps silver, other commodities, will hard assets be the last real category standing in the aftermath of such a collapse?
I think potentially the only candidate standing. Timing. The timing is hard. If the people who are making the decisions, the Federal Reserve and Treasury Secretary and governments around the world, do they actually understand what an inflationary fiat system is? I think there's levels of understanding. Because I've said it before, and Mises said it hundreds of years before me, and I'm repeating him. There's two ways an inflationary system ends. If you stop inflating it, you collapse. If you carry on inflating it, you collapse catastrophically. That's your collapse. So we can carry on inflating. And I think this is the reason why Doge was never actually meant to cut government spending. Because if it did, if the US balanced its books, that would have brought down the whole world's financial system because it stops being inflationary. And it has to be inflationary until it collapses. So it's just a matter of when. And when I came to a fuller understanding of this in 2017, I decided then it's every spare penny I'm buying silver. That's it. I will put off discretionary expenditure. I'll put off holidays. I'll put off whatever I need to put off. I'm just buying silver because it's coming. And then whether it comes tomorrow or in 6 months' time or 2 years' time, leave it too late to the end. Physical retail product will not be available.
Host Jesse Day and precious metals expert Ian Everard painted a stark picture of our current financial landscape. While markets are reeling from a major crypto crash, with Bitcoin plummeting from its peak, and an obvious bubble in AI stocks like Nvidia threatens to burst, gold and silver are standing firm, establishing new price floors and proving their enduring resilience. This isn't just a market fluctuation. It's a sign of a deeper, systemic rot. As Ian Everard explains, our debt-based fiat system has reached a mathematical endpoint. It must either collapse by stopping inflation or collapse catastrophically by continuing it. This inevitable devaluation of currency is precisely why physical metals are your only real shield. The most critical insight comes from Everard's first-hand experience on the front lines. He reveals an extinction event in physical silver products, with common coins becoming virtually unavailable and wholesale premiums rising sharply. This indicates a severe structural tightness in the physical market that far outstrips the paper price. The situation is so dire that inventories at the LBMA are reportedly running on fumes. This physical shortage is now being recognized at the highest levels, with the U.S. officially adding silver to its critical minerals list alongside China and Russia, who are already aggressively stockpiling it. Despite ongoing price manipulation designed to scare off retail investors and a mainstream media that foolishly dismisses gold's rise, the physical reality cannot be ignored. With every spare dollar being printed and the system cracking under the weight of its own debt, the evidence is clear. The time to prepare is now. The single most important action you can take to protect your wealth from the coming storm is to stack physical silver while it's still available. Subscribe to Fine Metals for best market analysis and insight.
Gold and silver, however, holding up quite well, with $50 silver and $4,000 gold seeming to be the new floor price for the metals. It's been said that Bitcoin was digital gold, but it seems to have been more closely tracking the broad market, the NASDAQ and the S&P, than it has gold and silver. And now we've seen this sell-off, and as I mentioned, other crypto coins taking an even bigger hit. and yet gold and silver are holding their own here. We've also seen a bit of cracks appearing when it comes to the broad market as well.
The figures are just outstanding. I did a little bit of research into how big the euro dollar market was, and all I could find quickly was 2023 Bank of International Settlements data, and they were estimating 76 trillion of derivatives and other instruments in dollars created outside of the US, outside of US control, and about 13 trillion in traditional loans and bonds. So, I mean, so let's round it up, $100 trillion floating around. When you start doing the math, if just a tiny, tiny speck of that tries to buy silver, I mean, again, the latest inventories at the LBMA value the silver, total silver held, and most of it's not. It's mixed. It's eased a little bit. There's virtually no common date Philharmonics, Britannias, Krugerrands, Maples, Kangaroos, virtually none available now. 2025 Eagles have become available again, so that's improved. Premiums have jumped up to wholesale. Don't want to upset any other dealers, but wholesale premium on 2025 Maples, here we go.
I want to talk about the U.S. officially adding silver as a critical mineral, along with a few other elements, including uranium. We've also seen China announcing export controls on the metal. I believe that's set to kick in at the beginning of the new year. Russia's obviously stated that it's stacking silver as part of a strategic reserve, along with platinum and palladium and some other things. Do you think governments around the world are starting to wake up to silver's importance here? I know China has been on this for quite some time now, but with this addition to the U.S. critical minerals list, it feels like in the West, perhaps they're waking up as well.
You know, dealers would call their buddy at HSBC and say, yeah, at this time, we're both going to do this. We're going to drive this way. Therefore, you can be on the long side, you know. So I think it wouldn't be that hard with that much power and those connections to make a profit, at least causing volatility. And causing volatility will slow down public adoption of silver. I think it definitely does. Every time we get a surge and more people come in, they get disheartened because instantly they're underwater for a few weeks or a month. But the time is getting shorter and shorter. So I think there's a lot of manipulation going on. But I also agree it is reducing, because if it was complete, silver would be trading around the all-in sustaining cost of a silver mine.
You know, gold, the reason for gold going up is not any of the reasons you're hearing. It's a speculative thing, and it could reverse at any time, so you got to be careful. Recently, Steph Pomboy appeared on Fox News. She was discussing how gold and gold miners have completely outperformed the broad market, and the host responded by saying, nothing stops nothing stops this train, but the market's ripping and I don't want to get in front of this train, as if that's connected. There's nothing to do with the fact that gold's going up, but it was just one of those dismissive comments, like she was told what she's supposed to be saying about gold, or she's being programmed what she's supposed to say about gold, not even giving any thought or consideration to the details that Steph Pomboy was laying out, just responding, oh yeah, we'll forget about that. Have you seen what NVIDIA is doing? Uranium market right now, this is a metal you've been focused on. You're one of, if not the only, bullion dealer in the United States that sells physical uranium. What's the latest going on in the market that you could give us an update on?
Market's getting tighter. So I've got a friend of a friend who's on the ground in China. They've been doing a bit of research without trying to get arrested. Apparently, I haven't had this verified, but it looks like they're using 2.5 tons of uranium making jewelry in China now, which is interesting because it's a way more interesting metal than platinum for jewelry. A beautiful blue, grey, deep shine, much harder wearing, 4 times rarer than by production, yet still dramatically cheaper than platinum. Harder to work with the highest melting. China is still aggressively buying uranium around the world. There was a German trader recently trying to find half a ton, 500 kilos. He couldn't find it in Europe, so he approached one of my suppliers, and my suppliers where's it going? And he let it slip, but it was going to go to China. So he said, no, I'm not selling it to you. You find it from somewhere else. So they're aggressively using European dealers to secure more rhenium in Europe and in the US. So that tells me that China knows where this is going, and they want to increase their stranglehold. And I didn't realize they had that much of an effective control. Because again, getting back to smelting copper, 8 out of the 22 largest smelters in the world are in China. If it was complete, silver would be trading around the all-in sustaining cost of a silver mine, which I hear figures between $14 and $22. So it is definitely detached from its industrial commodity price. And so is gold. I think a lot of gold mines are mining at $800, $900 an ounce. If it's a byproduct, I mean, and that's another whole issue that does really, I'm sure people have done some in-depth studies, but the fact that precious metals are a byproduct from other mine operations, that's a natural suppressant on their price, because that production will pretty well carries on whatever the price of silver and gold are doing. So I disagree with Gary there that it's over. No, I think they've got their fingers in the pie and they're still slowing it down.
Yeah, very interesting thoughts there on being able to cause the silver miners to drop much more in value. That is certainly true.
At this time, we're both going to do this. We're going to drive this way. Therefore, you can be on the long side, So I think it wouldn't be that hard with that much power and those connections to make a profit, at least causing volatility. And causing volatility will slow down public adoption of silver. I think it definitely does. Every time we get a surge and more people come in, they get disheartened because instantly they're underwater for a few weeks or a month. But the time is getting shorter and shorter. So I think there's a lot of manipulation going on. But I also agree it is reducing